Is there, Pearse Doherty? Can you promise them that this is going to happen?
No, we can't promise them, but the intention behind the bill by Deputy McGrath, which was the same intention behind my bill last year, is to give the central bank these powers. I think neither party want to see this legislation being required. We want the banks to do the right thing, which is lower their variable interest rate mortgages by about 1% at least, which would be about €2,000 benefit for the average mortgage holder out there. But in the absence of that, and we've seen that the banks won't do that and haven't done that in the past, so you have to bring in this type of legislation to empower the central bank. Now, the big question is, will the central bank use the powers? And that's something that we don't know. But our job as legislators is to do as much as possible to try and bring the rates down to what is the European norm and what is ethical. And therefore, empowering the central bank with these new powers is one step in the right direction.
You've put your finger on it there. It's all about whether the central bank are going to do this or not. Essentially, Stephen Curtis, they're opposed to it. So what makes you think this is going to make any difference at all to homeowners who are struggling to pay their variable rate mortgages?
Yeah, and I think, it is very important that the central bank have effectively said that they're not interested in using this. I think, the key thing behind this legislation is that it's there really because the banks have been stubborn and said, actually, sorry, we're not going to reduce these rates. And political pressure and political, requests have not been acceded to. And I think, the knowledge now from the lenders' perspectives that actually the legislators are serious about this, actually the legislators will go and put some legislation in place, means that they have to take this issue a little bit more seriously, and they have to think, a day may come where the central bank say, actually, do you know what, the legislators are right, and we will look at this. But I think it's important to have the legislation there. Whether it gets used or not, that's for a different day.
Yeah, isn't there a point there that banks have not passed on these rate drops successively, and as a result, variable rate mortgage holders are still paying extremely high rates compared to the rest of Europe, and it's about time they were put under pressure, Karl Deeter.
Yeah, well, almost half the mortgages out there are actually linked to the ECB. So in fact, most of the mortgages out there are either on a fixed rate or actually have got incredibly low rates. Now, there is a rump of them that don't.
We do know, for example, with some Bank of Ireland mortgages that they're borrowing at a rate of 0.8% and then they're charging customers 4.6%, 4.7%.
Yeah, rates have come down by 0.5% in about the last year, so rates are coming down, and that's a trend that is out there. There's quite an aggressive switching market, so people can actually get better deals by moving elsewhere. And I always welcome assertive customer behaviour where there's competition out there. The market also has one new lender this year and another new lender who will enter before the end of the year. So I just think that this is really good intentioned policy.
So what's wrong with it then? If it's a good intentioned policy and it is putting just that extra bit of pressure on banks to do something because they aren't acting, and at the end of the day we bail them out to a tune of €6 billion or so, why shouldn't we do it?
Well, because good intended policy can sometimes have bad outcomes. So, for instance, take two different outcomes. Say the central bank got this power and they said, actually, the banks aren't overcharging. In fact, they might be undercharging. Or what if they say they're overcharging and now we're going to make them force those rates down and they cut them down by 0.5%? Well, we just wiped nearly $1 billion off the valuation of banks that we want to sell and make a profit on, because you're now making them worth less. And I would like to see the money that we effectively wasted on a lot of banks actually recouped.
Okay, so we shouldn't really be meddling in the process. Would you agree to an extent with that there's a bit of a difficulty there when you pass through a bill, politicians pass through a bill and essentially telling the central bank what to tell the banks?
No, you're empowering the bank. You're empowering the central banks, and every power that the central bank has came from politicians at one stage or another, where we give them the options to control rates. For example, every money lender out there, rates are fixed by the central bank, individually assessed. The credit unions have an upper rate the central bank imposes. And what this is politicians basically saying to the banks that we are going to do what needs to be done to stop you gouging 300,000 variable rate mortgages. And Karl's suggestion there, yes, if your intention is to sell these banks and get as much return as possible, as quickly as possible, yes, of course, you'd want them to continue fleecing their customers. But what we want to do is stand up for those 300,000 customers who are actually being fleeced by the banks.
One of the arguments being made, though, by Fianna Fail was in the long term, this might look good, short term, look really good for the opposition, but in the long term, it's actually not going to be a huge benefit to customers, because what is stopping is new entrants coming into the market, because they're going to look at this kind of control or this empowerment and say, what's the point in us coming in?
I don't believe that. This is an argument that's been given by the by the Minister for quite a number of years now. This issue didn't just appear on the agenda in the last couple of weeks. It's been a campaign by both ourselves, Fianna Fail, by a campaigning group, by some in the media to have this happen. And the government continually told us, no, talking will see action, it will see additional competition. We haven't had additional competition over the last number of years. We've seen people leave the market, and what we need is a short-term intervention.
But do you think this is going to increase competition?
No, it won't increase the competition.
Okay, so is that going to be problematic for customers who want to shop around?
I think the point about competition
reduced competition is actually what caused, to a degree, higher mortgage interest rates during the crash, because no one wanted to be in Ireland. So if you do something that will inherently reduce competition, I would see that as being a big error in the making.
But I think we've got a situation where we have currently got high variable rate interest rates, and there isn't exactly, bundle loads of banks beating our door down to come and operate in this market here. We don't have to use this legislation, but if competition wants to enter the market, great, and I think everyone would welcome competition. But on the basis that it hasn't come so far, and variable rate mortgage holders continue to be fleeced, action needed to be taken.
Okay, realistically though, if this does go through, can the banks afford to cut their rates to the likes of 2%?
The banks are profitable. AIB, Bank of Ireland, they're profitable institutions. Bank of Ireland has some of the highest variable rate interest rates, and you've mentioned charging over 400% of the cost of funds to that bank. They're a profitable bank, which is...
So they can afford to do this?
Of course they can,
but
they're deciding not to do it because they can decide to do it.
Do you think they're in a position to do this? Is it sustainable?
It's kind of tricky because a lot of the profitability in Irish banks is now down to losses that haven't been occurring. So, let's talk about true cost of a loan. If you borrow about €300,000 using the current average variable rate of just under 4%, and it's there and it's heading down already, if you were to do that, the true cost is the interest, because when you make a mortgage payment, part is the capital, and that's savings. The true cost is €900. I don't see that as being gouged or fleeced or anything else. And I think that if we have people who are in trouble, let's focus on them, and that's fine.
Okay, so what are you going to do?
But don't just do it as a generic giveaway to everybody.
Okay, so you don't. Okay.
I think when you have a situation where Bank of Ireland can borrow money at 0.8% and lend it out at nearly 5%, I don't think you can say that by reducing some of the rates that you're going to reduce their profitability massively. Clearly, they can afford it. Their profit margin is whatever they make above 0.8%, and it sounds if they're currently charging 5% and we knock a bit off that, they'll still be doing grand.
They have operations. Actually, it's not as simplistic as that argument.
Right. Okay, but we did hear from a homeowner there, Sarah Hogan, who's saying, look, she's really hoping, and this would make a huge difference to her family finances. Isn't there an argument to be made that this pressure needs to be put on? And if you're not in favour of the caps being introduced, what solutions are there for people like her?
Switch your mortgage. It's freely available.
It's not really that easy, though, is it?
It's actually quite simple. You have groups like the One Big Switch.
You think banks are saying, yeah, that's no problem, we'll put you on a better rate?
With variable rate mortgages, and only 9,000 people signed up to One Big Switch. That says that there isn't a massive switcher market there.
But that tells you more about client assertiveness.
It tells you that they don't think they're going to be able to switch because the central bank will.
An education programme.
Let Stephen in there, because you help families in this situation. So what sort of challenges do they face then when they're looking for a reduction in rates or switch?
I think if you're talking to people that are in difficulty or in arrears, none of those people are going to be able to switch because no new lender is going to take them on. So they're stuck with the lenders that they're with. The same for people that are in negative equity. They're going to find it very, very difficult for some new lender to say, actually, we'll take you on. They're stuck where they are, and it's those types of people and those types of situations that actually this thing could help if needed. Okay,
all of this requires EU approval, of course. Do you think that's going to...
it doesn't require EU approval, it just requires us to consult with the European Central Bank, and that will happen. There's been a lot of scaremongering by the government in relation to all these different steps, and we can get fined and it's unconstitutional. These are all new issues that are just emerged over the last 24 hours, and we have to consult with the ECB, and it's appropriate that you consult with the ECB and the Central Bank, but that's what's going to happen as we go into committee stage, that we want to pass legislation that fits, that is, stands up to the test of time, that stands up to scrutiny, and that the President ultimately, because regardless of what the Dail does, the President has to sign this into law, knowing that it's constitutional. And there's amendments that we want. We see that there's some flaws in the bill, but I think they can be ironed out at committee stage.
OK, there we have to leave it. Pearse Doherty, Stephen Curtis and Karl Deeter, thanks for joining us tonight.